I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 10th of December 2023. We will be doing the weekly market review, starting with the DXY. Here we have the weekly time frame. As you can see, price last week traded up higher, rallied to this fair value gap, the weekly fair value gap from this candle's low to this candle's high. We have a fair value gap that formed here. We also have the bearish order block. You also have, actually, this has to be mentioned at the low, because when there's a fair value gap and there's a bearish or bullish order block, you should always look at the low. No, this is a bearish order block and there's a fair value gap here. You should be looking at the low of the bearish order block, not at the, let's say, open here. But if there was no fair value gap residing here, you'll be looking at the opening price. Anyway, so we traded to the weekly fair value gap, as you can see, barely touched it and closed above this fair value gap. Between this candle's low and this candle's high, there's a small fair value gap. We closed above it. Now next week, since we've closed above it, I'm expecting some kind of a, let's say, support at the weekly inversion fair value gap. Now it's called inversion fair value gap because we closed above it. So we have created it right there and we have closed above it right there. So this would be considered as an inversion fair value gap. If we open next week, I'll be looking for it to be treated as support that can send price higher to work inside this weekly fair value gap and perhaps reach to the bearish order block. Otherwise, if it was really heavy to trade to the downside and it has just been, let's say, satisfied with the liquidity that was residing above this high and barely inside this fair value gap, it will start trading lower. So the weekly constant encroachment will be considered for me if we get a daily closure below weekly constant encroachment as the last line of defense. If we close below it, this will tell me most likely that we're going to be trading at least to the consequent encroachment of this discount wick, and perhaps to the sell side liquidity. And below the sell side liquidity, you can see before that we have a wick consequent encroachment. If you go back to my previous weekly reviews, you can see it. I have showcased that weekly, the wick consequent encroachment, and we were very close from it and we reversed. Going to the daily time frame, as you can see, we took a buy side liquidity right there when we were trading up higher. As you can see here, there's not much internal range liquidity in this run last week. So Monday, Tuesday, Wednesday, Thursday, Friday, there's just one, I think it was very small fair value gap here, very small internal range liquidity. Price has filled it here and went back up here. But there's a small fair value gap that is right there. It's more of a refine because it's between, the fair value gap is between this high and this low. But on Monday we traded lower from the low of the week here, and we filled some of the fair value gap and we traded up higher, trading to the external range liquidity. This is the simple example to show you how price or how the market moves. From internal range liquidity on Monday, price trades to the internal range liquidity. After it has done so, where is the external range liquidity? It's right there. Above the buy side liquidity, we have the external range liquidity. Relative to this high and to this low, this is going to be a dealing range. After price has reached to premium, it has to offer price to discount. Then on Monday, it traded lower. Offered price to discount. This is the discount array, the fair value gap. It has traded approximately to the consequent encroachment. Now if you go to your charts and you measure from this high to this low, you will get a full fair value gap block. And if you measure the consequent encroachment, price on Monday pretty much reached to the constant, and then it has rallied up here, attacking the buy side liquidity, the external range liquidity. And you can also see that there is still a remaining fair value gap, so it's not fully filled here. We rallied up here, you can see that since we have attacked the internal range liquidity right there, there has been not any down close candle. So if you are buyer here, if you're buyer in Monday and Tuesday and Wednesday, all of them, if you're buyer of the US dollar index, you'll be profitable, because you're following what the market has been, let's say, telling you. And after we have attacked the buy side liquidity, what would you be expecting? Some type of consolidation, or let's say seek and destroy. And we've seen that here on Thursday and Friday. Now Friday was NFP. So for your info, just if you're wondering how does that price action has created. So now for the daily chart, that fair value gap, if we get any close below it, this is telling me that we're remaining our bearish standpoint and we're attacking the lower prices. Otherwise, I'll be aiming for this buy side liquidity, bearish order block, and this fair value gap right there. So, and preferably I want to see this low not be, let's say, attacked, or this low. I don't want to see any daily closure below this low, because below this low it is pretty much the mean threshold of this bullish order block. So you can see how price traded on Thursday to the bearish order block here. On Friday also it has traded to the bearish order block. You can see the wick has traded to it. And then yeah, but you can be arguing here that we don't have a fair value gap, and that's true. So it just traded to it on Thursday. You can see it pretty much was very close from the mean threshold, but it repelled away from the mean threshold very quickly and closed right there. Friday we opened, rallied up higher, rallied lower, rallied higher, until we closed here. So I don't want to see price if we're still holding higher prices to accumulate more short positions there. I want to see price not close on daily closure. I don't want to see it close on daily time frame below this low, below Thursday's low. If we get a close below Thursday's low, I'm going to be aiming for this fair value gap and this sell side liquidity. What does this mean to the forex market? Now I'm reviewing the Euro USD and the Pound USD. I'm going to be showing it to you later, but this means that if price trades and close below this fair value gap low, and I'll be aiming to get lower prices here on DXY, attacking this fair value gap and this low, this means that on Euro USD and Pound USD I'll be looking for higher prices, and I'll be explaining later what higher prices I'll be aiming at. So I think that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame. As you can see, the first thing that you would notice here that we're starting to kind of run out of fuel. Since we've reversed here at this point a few weeks ago, we run it up higher. You can see how big and large those up close candles are. Also here, and since we're approaching, the moment we've started approaching the, let's say, the last 2 weeks of November and December, which are to be considered the holiday month, we're starting to, let's say, see a very low magnitude in price action that will be attacking higher prices. And that's the explanation to why it's better for you to, let's say, lower your activities in the marketplace between the second week of November to the second week of February. You can see pretty much in the chart the last few weeks before we've approached, since mid-October till, let's say, mid-November, we've been seeing higher prices with a good magnitude. But since we're now entered December and the last 2 weeks of November, you can go by yourself and you can go look at the charts on the intraday. And I'll show it to you on the daily time frame. It was very give and take price action. Anyway, so now I'm if we're bullish here, we've seen a retracement. It was very close from this fair value gap, but it didn't reach to it, and we've created a long discount wick. The wick consequent encroachment of that discount wick, I'll be monitoring that next week. I don't want to see any daily close candle below the wick consequent encroachment. I want to see it being treated as support. Now it can stab through it, but it is preferably to see it not close below it. I'm still aiming at the rejection block here and the buy side liquidity. So that's my drawn liquidity. My words that I'm explaining it to you here is very clear, it's very precise. I'm not being ambiguous in any way. I'm telling you that my drawn liquidity is that buy side liquidity and the rejection block. My last line of defense is the wick consequent encroachment. If we get a daily closure below the wick consequent encroachment, that is going to tell me that we're going to be seeing, let's say, a retracement, perhaps to the weekly fair value gap or this fair value gap, but most likely that we're going to be seeing a retracement, and you're better off not looking for higher prices, and you're better off like looking for retracements for shorts in that period. Let's if we get on Monday daily closure below the wick consequent encroachment, Tuesday, Wednesday, Thursday, Friday, I'll be looking for lower prices reaching. I'll be measuring the discount relative to this dealing range from this low to this high, and I'll be getting some kind of expectation of how price wants to retrace to. Perhaps this weekly fair value gap, perhaps this fair value gap, perhaps the bullish breaker. So that's what I'm looking at right now. Going to the daily time frame, this is what I wanted to mention to you. So you can see how price just kept running. It's very clear and smooth moves here. Since like after expansion, we've seen some consolidation. That consolidation is near the buy side liquidity. And if you see consolidation, this is a very unique signature in price action, that if price reaches to, let's say, buy side liquidity pool and it started consolidating below it, so this is building the sentiment for retail that we are now at resistance level and we're likely to crash down. And we've seen that here on this candle, it has traded lower to the fair value gap. Even the next candle, it opened, traded lower, took out previous day's low, and it really built the sentiment for retail that we're going to be trading lower of this resistance level. So they will be considering this. Let me explain it to you. We have a low here. After we broke below it, retail are going to be trusting this as resistance, support turned into resistance. And this worked here because of the concepts that have been taught to me. We have a fair value gap and we have a mitigation block. That's why price stopped here. It's not because it's support turned into resistance. That's not it. Anyway, so now after we traded lower and traded up higher here, people will be mentioning that, oh, this is still a support turned into resistance. So this is still a resistance and we're going to be selling here. And the moment they sell here, aiming for lower prices, sure, they will be in profit this day. Price will open and they will be here in profit. But at that moment, price will attack their liquidity pool or their sells, the buy stops that are residing above this buy side liquidity or their stop loss, and will keep running up higher, attacking their liquidity. So this is the simplest way I can put it on how we, let's say, we're attacking retail. We're not working with them. We know how they think, we know their inner dialogue, and we try to work against it. So if their indicators or if their, let's say, ideas are telling them that, we're looking for higher prices or we're looking for lower prices, I'll be looking for the opposite. Here, right there, if you would, I've mentioned it and I've explained it later, earlier in NASDAQ. If you would go to previous weekly reviews, I've connected a diagonal line here at the lows and at the highs. The people who trying to short here, they will be connecting these lines and they will be saying, oh, this is a resistance based on this diagonal line and they will be selling. So all of those retail ideas, it's better for you to learn them in order to go against them, not to go with them. There's this herd the retail who gonna be selling and buying together, and you as a smart money, you'll be looking to pretty much go against what their thoughts are. So right there, many thoughts of that this is support turned into resistance, so they will be sitting here also because it's a resistance. Another thought of retail is going to be that they will be connecting the diagonal line, and they'll be thinking that, oh, we're approaching a resistance area based on this diagonal line. You can see that in the past that this is a diagonal line and price is going to be stopping here, because we've seen that here right there, and it is likely that we're going to see price stop here and start reversing, and we've seen that on this day. And the next day it's also traded lower, but no more. It attacked their buy stops, their stop loss has been attacked here, and we've been continuously attacking their buy stops above this high and above this high. And some of those people are large funds. Some large funds are setting their buy stops, or let's say stop loss, above these highs, those buy side liquidities, and we're slowly approaching to them and attacking them. You can see. And now the other idea is that once we've entered, as you can see right there, once we entered the second week of November, you can see that the magnitude of price action has been very, let's say, low volume. It's just being held in place. It's not moving like it moved in the past. You can see that those moves in the past were really good, like you'll be catching some moves here. But once we've entered the last 2 weeks of November, you can see that price is just being like, you cannot be holding a position as a short term or let's say swing trade. Your best bet here is just to scalp if you really want to scalp, but you also need to be nimble and you need to be careful of how you trade. On the daily time frame, I'm looking at the volume imbalance right there. We have a volume imbalance. The wick is meeting this wick. This is a volume imbalance. When there is no wicks whatsoever, so there is no trading, that's a liquidity void. This is not a liquidity void, this is a volume imbalance, because there are wicks meeting each other here between each other, but there's no bodies. So when there's no bodies but there's wicks, there are wicks but there are no bodies, that's volume imbalance. When there are no bodies and no wicks, that's liquidity void. So we have a volume imbalance here. I'm looking for price to attack it and to continue running up higher. If we close above the volume imbalance, I'll be looking for it to be treated as an inversion volume imbalance, which will be treated as support that will send price higher to the rejection block and to the buy side liquidity. That's my thoughts about, let's say, that's my thought about ES. That's what I'm expecting from ES. So I think that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm also viewing the weekly time frame. You can see that on NQ, it has traded lower, reached to the weekly fair value gap, it has accumulated some positions in the weekly fair value gap, and you can go to the past, you can see that we have a bullish breaker. This is a low, high, lower low, that's higher high. So this would be considered as pretty much those two candles, because you have to look at the full range, not just this candle, but both candles. This will be considered as bullish breaker. Price trades back to it after it has broke up higher. You don't need to see price close above it in order for you to accumulate positions at the bullish order block. You just need to see price trade above it. If it return, you can be buyer here. You don't need to see it trade, and let's say this on this week or this week it didn't close above it, but it trades above it, so you still can be a buyer. You don't need to wait until the next week for price to actually close above it so you can be a buyer, because if you do so, you will have to wait for a retracement, which we got last week. Now what I'm expecting on NQ, we have a discount wick of last week, and it's to be considered a key point for me. I'm monitoring the wick consequent encroachment of that discount wick, and I'm looking if we get any daily closure up below this wick consequent encroachment of this discount wick. I'll be expecting price to retrace lower, perhaps to this fair value gap. Otherwise, if we treat the wick consequent encroachment as support, or we didn't even reach to it and we started attacking higher prices, I'm looking for this buy side liquidity and the monthly breaker high. I'm being very precise, and I'm being very clear with my words. I'm not saying anything ambiguous. And for the people who are trying to skip or not listen to the whole weekly review, it's their loss. Going to the daily time frame, as you can see, this is the weekly with consequent encroachment from the weekly time frame. This with consequent encroachment. This is the daily one. You can see that on the daily time frame, we have this also premium wick. If we get a daily closure above this wick consequent encroachment, it's gonna be telling me that we're looking for high prices. Why? I'm gonna be explaining to you. First of all, it's the wick consequent encroachment of this candle. Second, it is the monthly fair value gap consequent encroachment. So we have two key points. You can see that the consequent encroachment of the monthly fair value gap has been, let's say, sensitive. Whenever price, even here, reach to it, price trades below it, trades away from it, and once it reaches to the consequent encroachment, it's being very sensitive and it will send price away. Here, when price trades to it, it's just being, the wicks are just stabbing through it, but the bodies are respecting it pretty much. So we're not seeing any disrespect of the monthly fair value gap consequent encroachment. So if we get a daily closure above the wick consequent encroachment, that's telling me that we're likely to reach for the buy side liquidity right there, this high, the monthly fair value gap high, and will be treated as support, the buy side liquidity and the monthly breaker high. So I'm being very clear, and I like to deliver my weekly reviews based on if, so, then. So if we get let's say a signature price action, if we get a daily closure above this wick consequent encroachment, these are very specific levels. It's not ambiguous at all. It's especially in the indices and the futures market here on NQ, it is not different if it's just one broker, the CME. So we don't have different prices. It's all the same prices to the tick. So all of those levels that are mentioned here are very precise to the tick. It's not really, let's say, for the forex market, it can be interchanging based on the broker that you're trading through or that you're viewing price from. But in terms of the futures market here on NQ, ES, and Dow, which I'm gonna be sharing it later, it's very precise and it's just very precise prices. The tick that I have here, the high is the same high that you have on your charts. The low here, the same low that you have on your charts. So we don't have any changes in the numbers or in the prices. So what I mentioned here, that wick consequent encroachment, that's a price level that's on your chart and my chart and everyone's chart. And if price gets a daily closure above the wick consequent encroachment, this means that we're going to be seeing higher prices. The same thing can be said if we get a daily closure below the wick consequent encroachment, which is also approximately the mean threshold of this bullish order block. This is going to be sending price lower. I'm telling you, every move that I'm telling you about, it's very precise and it's very calculated. I'm not sharing things out of curiosity. I'm not being, let's say, anticipating out of no concepts. No, I'm telling you based on very precise movements that have been taught by my mentor. Anyway, that's what I think about NQ. Going to Dow, here I'm viewing the continuous contract and I'm also viewing the weekly time frame. You can see that last week we attacked the buy side liquidity, and this week we've formed a weekly fair value gap, so it was pretty much held in price after expansion. Especially after expansion that meets or attacks a buy side liquidity pool or a high time frame drawn liquidity or a buy side liquidity, you'll be expecting the next week to be consolidation. And this is where you want to be. Let's say if last week you've attacked the buy side liquidity, and I've mentioned it last week that you want to be celebrating it in a way that you're journaling it. You want to be annotating it down and just tell yourself that you actually got this move. You've actually called it out and it has been in price. So, and you can see that last week we've pretty much been consolidating. Next week, since we're very close from the buy side liquidity, I'm expecting price to just attack the buy side liquidity. And it all depends on what the other indices are trying to do. It can retrace to the weekly fair value gap because after attacking the external range liquidity, it would be expected to see price attack or reach to the internal range liquidity and work inside of it before attacking the external range liquidity. If it has been satisfied with this strong liquidity, we will get a retracement. Otherwise, it will just continue running up higher to this buy side liquidity. And you can notice that we're very close from the buy side liquidity when comparing it to the weekly fair value gap. So it would be ideal for price to just run for the buy side liquidity. Going to the daily time frame, the same thing is mentioned here. We have a buy side liquidity here, our relative equal highs. Price can be attacking them and reaching to the buy side liquidity here. And we've seen a retracement here, working inside this small fair value gap. If price closed below this low, it means that it will likely work inside this fair value gap before it actually run up higher for this buy side liquidity. But I'm still aiming or looking for higher prices, expecting the buy side liquidity to be run next week or maybe the week after. So that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame. As you can see, last week we've been trading lower, retracing. We retraced to the bullish order block here, and you can see we closed inside the weekly fair value gap, so we're respecting it. We didn't close below it, which means we're likely to see higher prices attacking this buy side liquidity and this buy side liquidity. Now, what I don't want to see, if I'm still bullish, and if price wants to really trade up higher, the mean threshold of this bullish order block, or let's say the low of this week, I don't want to see a daily closure below this week, which means that if we get a daily closure below this low, it means that we closed below the mean threshold of this bullish order block. And if we close below the mean threshold of this bullish order block, it means that we're going to be more likely reach lower, maybe to the rejection block or to this low, the consequence of this premium wick, before we start trading higher. But I'm pretty much expecting higher prices. The last line of defense for me is going to be the mean threshold of this bullish order block. I haven't annotated it here to keep the charts clean and to give you an assignment for you to go and do the charting and the measurements by yourself. Going to the daily time frame, you can see how we traded lower. You can see the bodies are pretty much respecting the weekly fair value gap. They're not trading below it. Sure, stabs, mohawks below the weekly fair value gap, but it's not closing below the weekly fair value gap. We've reached to the bullish order block here. This is the bullish order block of the weekly time frame, but when you refine it on the daily time frame, it's going to be this down close candle. Yeah, this line is representing the higher time frame, the weekly bullish order block. But when we go to the, I wanted to share with you and show it to you both lines here. This is the weekly bullish order block here, this line, and the refined bullish order block on the daily time frame. This is a refined bullish order block on a daily time frame, and you can see how price trades to it on Friday on NFP. It trades lower to the bullish order block, and it retraced and closed inside the weekly fair value gap. So this is kind of telling me that we're likely to see a reversal here, attacking the buy side liquidity. You can see that I wanted to share with you last week the premium wick consequent here. The wick consequent, pretty much of the premium wick and the discount wick. Here they are. I've removed them from the weekly, but I'm showing it to you on daily. I've mentioned it earlier last week that if we get a daily closure below the discount wick, it means that we're going to be attacking the sell side liquidity and we're going to be walking inside the weekly fair value gap. If we get a daily closure below above the premium wick, we're going to be attacking the buy side liquidity and reach to the high time frame buy side liquidity, drawn liquidity. And we've seen that on Monday, Tuesday. Monday we got a closure and we have attacked the sell side liquidity, so we got both targets on Monday. Tuesday we've been digging deep into the fair value gap, the weekly fair value gap. You can see that the daily inversion fair value gap is now treated as, it was treated here as a support. Now it's been treated here as a resistance, kind of. I want to see it rise after it has traded above it later on. I want to see price trades and treat it as support and pretty much reach to this fair value gap as a drawn liquidity. If we trade above it, it will be treated as support that can send price to the premium wick encroachment. Trade above it also being treated as, I'm giving you the dynamics levels. These are all implied support levels that are going to be in the charts. So the chart hasn't yet reached above those levels. And I'm telling you, if we get a reversal here, because this is what price is telling me, it's telling me pretty much that we're likely to see higher prices. And if we do get higher prices, I'm pretty much telling you the implied support level that are going to be in the chart. It hasn't been implemented yet, so it hasn't been printed. And I'm telling you that this is what's going to be happening in the future. We're going to be treating those levels that I've just mentioned as support. That's going to be pretty much, after we trade above this high, we're going to be seeing a retracement. And what is going to be stopping this retracement? This high of the fair value gap, the consequent encroachment of the fair value gap, the low of the fair value gap. If it was really wanting to accumulate position and hedge, because this is gonna be pretty much a market maker buy model. So I'm expecting this to be a smart money reversal, and we start trading up higher, attacking this original consolidation, which is the buy side liquidity. So that's pretty much it. I'm giving you the dynamics, the dynamics implied levels that's gonna be actually printed in the charts in the future. That if the last line of defense is not being violated, if we get a daily closure below this low, or pretty much below the mean threshold of this bullish order block, we're likely to see attack to this sell side liquidity, maybe work inside this fair value gap right there. Otherwise, as I've mentioned earlier, we're attacking the buy side liquidity. So in a layman's term, I'm looking for higher prices. That's gone to my head, my bias. It's looking for higher prices, attacking this buy side liquidity. That's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame. As you can see, last week we've seen a retracement to the weekly fair value gap, and we pretty much worked inside the internal range liquidity. What is going to be expected now? I've already told you that before. After price work inside the internal range liquidity, what do we expect later? We expect a run towards the external range liquidity, and this is what I'm expecting. And also you can see what is supporting my ideas, that the weekly inversion fair value gap, I forgot to mention it here, but you get the ideas. The weekly inversion fair value gap is being pretty much treated, and you can see how price is just closing inside of it. It didn't close below it, and you can see it also has closed above the consequent encroachment of this weekly fair value gap. So it's pretty much, it was tapping through just to accumulate orders that will be sending price. So they're like hedging, and they're, let's say, offsetting their position every time price creates a down close candle, which is going to be in the future a bullish order block. So I'm looking for higher prices, attacking this buy side liquidity, and eventually this buy side liquidity right there. Going to the daily time frame, as you can see, the same buy side liquidity that I've mentioned, how price is just respecting the weekly fair value gap, the weekly inversion fair value gap, this inversion fair value gap from this candle low to this candle high after we closed above it. It's being treated here as support. You can see the bodies are treating it as supports. No bodies are closing below it. To the tick, you can see it. It has traded to the bullish propulsion block and was very close from trading to the bullish order block. I mean, if you would look at it from the high, it would have traded to it, and we've seen a retracement, and that's on NFP actually. So that's what I'm expecting. I'm expecting price to just continue running up higher, attack the buy side liquidity here. So now we're done with the retracement. We walked inside the internal range liquidity, we've accumulated positions, and now we're gonna be attacking the buy side liquidity and this buy side liquidity, and eventually the buy side liquidity right there. These are gonna be my draw liquidity in the future. So I think that's gonna be pretty much it for this weekly review. I also want to mention that next week we have FOMC interest rate announcements, and I think we also have CPI. So, it's really important for you to be cautious and to be careful, extremely careful on weeks like this. Even last week when you have NFP, you have to be careful when to trade and when not. You have to have rules, because without rules you will fail. Also, I want to mention that most likely regarding the futures market, ES, NQ, and Dow, we're likely to transition into the new contract, the next month contract, which is going to be the H24. So for ES, it's going to be ES H24. NQ H24, Dow YM H24, etc. You get the idea. So I think I'll be attaching bar charts and bar chart, in the description below. You can go into that link and you can be, let's say, doing your study, and you'll be able to know when we'll be transitioning to the new month's contract based on bar chart information and data. So I hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.